It's something Peter Lane said to me on my podcast, which is we've got to create solutions to meet people where they are. And that's where that really spurred me on and confirmed that it is IFAs that need to get on board with this so that they can, hopefully when the FCA ban gets lifted, they can buy it within their tax wrappers, paper Bitcoin still, within their ISAs, within their SIPs.
Dan, how you doing?
I'm doing well, John. How are you?
Yeah, I'm very, very good. I'm sitting here and I've got a fan blowing straight at me. So I hope that you can't hear it because it's so hot in this room right now.
I'm in an old converted garage, which is actually quite cool in the morning. It's quite nice. We were recording in the morning, but by about 1 p.m, catches the sun, massive glass doors here. So we've already got all the windows open. It's actually quite cool, but give it an hour and we're going to be roasting. It's freezing in the winter and boiling in the summer. It's not ideal.
So funny. I was saying that to someone yesterday, actually, was I'll complain when it's really cold in the UK. And then I was going to meet friends yesterday and I went and I was like, oh, this is too hot. I was like, oh God, what? Are we ever happy?
Yeah. I remember those days living in London. I used to have to catch the Central Line or the Piccadilly lines, both very deep, very warm. And actually one of my funniest memories is in the heat wave of 2018, the Central Line tweeted, without irony, we're in the process of upgrading all of our rolling stock and expect it all to be rolled out with air conditioning by 2032. I was like, that's 14 years away. Like, that's a whole generation of people that will move to London, live in London, build a career, start a family, and move out of London before you've upgraded the rolling stock.
It's such a weird thing to be advertising.
Yeah. Without irony as well. Just tweeting it out without irony.
Well, yeah, thank you for jumping on, man. It's good to have you on the show. And before we get into like what you're building now, because it's very cool and people will know it by like the title of this episode and the thumbnail on the YouTube. So I first just want to get into, because we had a call, I want to say like, was it earlier this year at some point? And then you were telling me a story about living in Lebanon and you seeing the cash devaluation. Like, and then I saw that you posted on LinkedIn about it. And it was like, I used to think Bitcoin was a scam. Mm-hmm. And then you were saying like, then I landed in Lebanon and it was like a couple of days later that the value of the currency had lost like 40%. Can you take me back to those days and like tell me that story? And then how's that kind of shaped like where you are now?
Sure. So I think like most people, when they first hear about Bitcoin without doing any research, they're skeptical. So I probably first heard about Bitcoin in 2012, again in 2015, 2017 during that bull run. 2018, I think my mum went to a lecture at the LSE, came back raving about it. 2019,
wow, that's unusual,
right? Yeah. And then 2019, I invested in a friend's company in Brazil. I actually remortgaged my house to do that, so I leveraged to invest. Not good financial advice practice. And what in the process of investing in his company, he said you should take some of this money and invest it in Bitcoin. So I'd heard about it, 5-6 times by 2019. And in every case, I dismissed it by having done no research, just dismissed it saying it's too disruptive, governments will never allow it. And obviously, as we know, once you do an hour or more's research, you're like, oh, governments can't ban it. They've tried. It perpetuates anyway. So then fast forward to December, late November, December 2020. And I was heading out to Lebanon to be the founding teacher of a new charity. So I was teaching English and football in 2 refugee camps just outside of Beirut, or in the southern suburbs of Beirut. And as I arrived in Lebanon, they were about a year into currency collapse. So for about 30 years, from the end of the civil war till 2019, the Lebanese lira had been pegged to the dollar. So it was 1,500 lira to the dollar for 30 years. Now, obviously, to maintain any kind of peg, you have to have the reserves to back the peg. So the amount of lira in existence needs to be backed by the corresponding number of dollars. 1,500 fewer, right? 1,500x fewer. Surreptitiously, the Lebanese had been doing what most governments do, which is they had just printed wildly. And the black market figured this out in late 2019. So the peg fell on the black market from 1,500 to 1,510, 1,520, 1,530. And by the time I arrived in Lebanon, it was about 5,000 to the dollar. So it had already lost like 70% of its value. The official exchange rate was still 1,500. So in order to exchange dollars, you had to essentially exchange it on the black market. A guy had to come to my hotel. Actually, a side note, funny story, because everyone was still figuring out the arbitrage, I was staying in a really luxurious hotel suite for $150 a month.
A month?
A month. Because they were still charging the lira daily rate. And so, like, if you have dollars, you're like, yeah, that's not a problem. That's, $2 a night or whatever. So, so I arrived. I had, thousands and thousands of dollars. I was supposed to be there for 6 months initially. And I was like, at the time, dollars and lira historically had been interchangeable, and now they're completely interchangeable. But at that time, you couldn't go into a shop and buy with dollars. Everyone, for some reason, wanted lira, even though the lira's value was changing, devaluing by the hour. So I bought $1,000 worth of lira. I was like, I don't want to keep doing this. This is a hassle, right? To arrange a time with a guy on WhatsApp to come and deliver. I was like, I'll just buy $1,000.
It's like a drug deal, but like a money deal.
Yeah, exactly like that. Exactly. You've got to get a contact. You've got to arrange a time. It's pretty surreptitious. There's envelopes changing hands. Yeah. And so all of the Lebanese people that I'd made friends with in the hotel and all of the workers in the hotel were like, do not buy $1,000 worth of lira. And obviously, being British, being stubborn, being closed-minded, which is why I'd never found Bitcoin or been open-minded to Bitcoin, I had no curiosity. So I didn't listen to them. I was like, no, I only want to do this once every few weeks, So, yeah, fast forward a couple of hours, 5 million lira arrives, massive envelope, padded out like this in $100,000 notes. So their equivalent of the US dollar, or the greenback, is a $100,000 note, which historically was worth $70, $80. So it was a lot of money. And so this envelope arrives with 5 million lira. 3 days later, the exchange rate has collapsed to 8,000 to the dollar. So this 5 million lira that bought $1,000 worth of stuff, 3 days later bought $600 worth of stuff. And it was the first time ever where I've encountered, we've all heard of hyperinflation, but it was the first time ever, it was a real gut punch to be like, oh, that was a terrible trade. That was realistically, that was the first time I made a trade, and all currency exchange is a trade. But it was the first time that I'd done it thinking, this is now a trade, and I need to be aware of what trades am I making? How much am I exchanging for this currency from one currency to another? And the second currency is literally melting.
So, because not many people experience that, you're right, of like, we experience like inflation here in the UK on a, like, all this is like, when we talk about hyperinflation, is like taking this like 10-year period and just condensing it into like a matter of days. What was it like being there, because so for example, I've had like people from Argentina on the podcast, people from Venezuela. So Maurizio talked about this from Venezuela, and living within hyperinflation, of people that were living there had, at the end of the day, had to go and exchange their currency as fast as they possibly can into the dollar, or just go and buy stuff that's non-perishable. And like, what was it like just seeing what the culture was like living there?
So when I arrived, the main thing that happened. So actually, let's backtrack slightly. You're absolutely right in that the only variable there is time. So I like to show this in my workshops, which is the collapse of the lira versus the dollar. And it's the lira ramping up one direction. But if you flip it on the x-axis, it's the purchasing power of the dollar versus lira. And that goes down massively over 3 years. And then on the next slide, the reason I show that is because on the next slide, I just show the purchasing power of the dollar going back 100 years. And it's the exact same chart. It's just the only variable is time. So 3 years versus 100. So over 100 years, the dollar has lost 99% of its purchasing power. And over 3 years, in reverse, it loses 99% of its purchasing power versus the lira. So you're absolutely right. When I arrived, the main thing that had happened is, and it had already happened by the time I'd arrived, which was the middle class had just been wiped out. So the other thing, which should have been a huge red flag, was in the sort of year preceding the peg starting to collapse. Lebanon has a huge diaspora. It probably has the largest diaspora in the world. So that's people that live abroad who are Lebanese and who send money back. Lebanese banks, because there was a shortage of dollars in the system, were offering 15% interest rates if you sent your dollars back. So you had all of the Lebanese was saving in dollars because they were interchangeable. They were putting all of their dollars in the banks. But you also had vast swathes of Lebanese. I heard of a chap that worked for Meta, I think, in Dubai, and basically just put everything he had into a Lebanese bank. And then what the Lebanese banks did was say, you can't have your dollars. You can have your lira, but it's at the official exchange rate. So if you've got whatever it is, 100,000 in dollars, whatever that comes to at 1,500 lira to the dollar, you can have that many lira back. But the exchange rate is now 5,000, 8,000. So it's, you've lost 80% of your value. And they were only giving it back in increments. So it essentially just wiped out all of the middle class. So by the time I arrived, despite everything, I arrived a couple of months after the port blast. I don't know if you remember that. There was a huge explosion in August 2020. And I was walking around Jumeirah, which is the area that got really heavily hit. And Jumeirah is it's like a weird mix of Mayfair, Soho, and Shoreditch all rolled into one. So it's where the very wealthy and the hipsters and the cool people hang out, right? And this whole area got obliterated, and I was walking through it, and so you've got mass currency collapse, huge port explosion, and yet the people were so outwardly friendly to me. And I don't know whether that's because I was a foreigner, but everyone was very friendly. But there was a general uneasy feeling of like things are not going well, and also a very deep unease about the future. So hyperinflation, my take from it, hyperinflation led to this incredibly short-term thinking. You're absolutely right. It was live for today, get rid of this lira for something else. Get rid of it for a dollar, get rid of it for a washing machine. Because if you don't, a year from now, it's worth nothing.
Such a, just thinking about living that way, it infuriates me that that this is the system, the fiat system that we live in, and because they're all the same. Like, it is like we're using the same system as they do in Lebanon. Like, everything is fiat, but they've just been slamming that money printer a lot harder than us. And I'm sure like in different countries also corruption comes into play as well. But moving on, like I love like that story because you told me that a couple of months ago, and I was like, it's cool that you've been there and you've witnessed it, you've lived it. And then how does that? So you came back to the UK after that, and you were working as a financial advisor. Is that correct? Straight after.
That's correct. So I spent about 3 years in Lebanon in the end. So I did, like December 2020 to about October 23. So about 3 years. So I lived through the currency collapsing all the way to 120,000 to the dollar, and then it settled back at 89. So clearly it has settled at 89,000 for like the last couple of years now. So it's clear that that was actually the amount of lira in the system. The market just needed to figure out exactly what is the value of this thing versus the dollar, and it found it. But it's collapsed from 1,500 to essentially 90,000. And then, I was living off savings and made an absolute hash of my first cycle. Absolute hash of my first cycle. And so I realized I was going to have to retrain. I needed to get a job. I'd spent 15 successful but unhappy years in advertising and marketing and ad tech. I was good at it. I got paid very well for it, but I hated every minute of it. And so having then found Bitcoin and gone down this deep rabbit hole of what is finance, what is money, I was like, well, I have a skill here that I should get paid for. I enjoy it. I found something that I enjoyed for the first time, and I was like, I should get paid for this. So I retrained as a financial advisor, having got incorrect information, which was that I could remain in Lebanon and practice in the UK, which was incorrect. So I came back to the UK. I joined one of the large networks, took their academy program, and graduated from that probably mid-2024, set up my own financial advice firm, and I was doing pretty well. But again, just deeply unhappy because I was meeting with folks who were 55, broke, having to access their 70 grand pension now. And I was like, this 70 grand is supposed to last you until you're 90 in theory, and you're having to access it now because you're broke. You need Bitcoin. And it's illegal for me to talk about Bitcoin to you. Like, I can't just even surreptitiously say, hey, download this app, Strike or Coin Corner, just put £1 or £2 a day into this thing, and wait 20 years. That's illegal. Like, I'm literally breaking the law if I do that. So I didn't last long at that. I was there for a hot minute. And then, so instead I took stock and I was like, well, what do I have? What are the assets I have? I have this half a decade research. I've done the 10,000 hours of practice and research that it takes to become competent at something, at a skill. And I'm a qualified financial advisor, no longer regulated, no longer practicing. And I was like, well, then there has to be a Venn diagram there. There has to be an opportunity. Financial advisors must be wanting to learn more about this asset, but realizing that it's really difficult to get up to speed on. Like, you have to do a lot of homework. So what if I can, within 2 hours, what if I can give them, if you're aware of the Pareto rule, the 80-20 rule, right? So what if I can get them to 80% in 2 hours?
And that's then how the Bitcoin IFA was born.
That was the genesis. So when I left the network, I was actually trying to start two businesses. I mean, I have a habit of taking on too much, and that would have been too much. So I was starting a B2C coaching business. So essentially training retail to become their own IFA. And I was also starting the B2B business, which was training IFAs on Bitcoin. And that's when I reached out to you, I reached out to Joe Bryan, and I just went deep in and, don't ask, don't get. Sorry. This might lead to a lot of calls for both of us. But I just started reaching out to Bitcoiners in the UK, Team GB, and just said, hey, can I have 30 minutes, 40 minutes of your time just to make the connection? Off the back of those conversations, I ended up going to Cheat Code. So that's where we met in person for the first time. And the energy over those 4 days and the people I met and the businesses being built. So I came back from that and I was just like, why am I trying to do these 2 businesses? Like, I'm all in on Bitcoin. It has to be Bitcoin. Are you aware of the Japanese term ikigai? Do you know that?
I do know it, but you're gonna have to explain it because I couldn't explain it.
Let me just get a book here to make sure I remember it correctly. So it's the nexus point of what you love, what the world needs, what you can get paid for, and what you're good at. And typically people fall into 3 of those. Like the ones that's typically missing, like me for 15 years in advertising, is what you love, or the one that's also typically missing is what you can get paid for. So if it's just a hobby. And whenever I was doing my ikigai practice or trying to figure it out, and it just kept coming back to Bitcoin. And then I left Cheat Code and was like, it's Bitcoin. Like, it is just Bitcoin. So, and there's there is a market here. I don't think there's many financial advisors that are that clued up or curious about Bitcoin, but there's some. And as you and I both know, there absolutely will be a business here. It's just a question of whether it's now, 6 months from now, a year from now, 5 years from now, because eventually they will all need to know about Bitcoin.
And I'm seeing lots of financial advisors reach out to me, or I'll see them at events or wherever it is, and they will be asking themselves that kind of like ethical question as well, which I think you probably asked yourself whilst doing it, of like, I'm giving financial advice to my clients, but like what I truly believe is they should be looking at Bitcoin, and actually that's where their time should be spent, is learning about that and investing in that. And over the last few weeks to months, I'm starting to see a little bit of a shift, which is probably spurred on by America, massively, actually going full force into Bitcoin. What for you? Are you seeing this? Actually, let's go back. Actually, from when you were a regulated financial advisor, what was that feeling like of, I really want to talk about Bitcoin, but I can't talk about Bitcoin? That must be such a difficult place to be.
Yeah, it's a really good question. The overriding emotion was probably frustration, and then probably feelings of sadness / guilt, because I can't talk about it. I want to talk about it. Could there have been some way? So I never did this, but thinking back, could I have anonymously told them about it? But actually, honestly, most of the clients that I saw, Bitcoin itself was probably technologically beyond them. Most of them wouldn't have known how to open an ISA. So the idea of this ethereal, abstract thing that exists, digital money that exists in cyberspace that you can never physically hold, the opening up an exchange account, putting it onto a cold wallet, it would have been way too difficult, which is why I think there's something Peter Lane said to me on my podcast, which is, we've got to create solutions to meet people where they are. And that's where that really spurred me on and confirmed that it is IFAs that need to get on board with this, so that they can, hopefully when the FCA ban gets lifted, they can buy it within their tax wrappers, paper Bitcoin still, within their ISAs, within their SIPs. And what it will require is a deep trust in the IFAs, because most of their clients are not going to go down this rabbit hole. Most of their clients are not going to do 10 to 100 hours research on Bitcoin, because they don't do 10 to 100 hours research on money, on ISAs, it's what they pay their financial advisor for. And an analogy that I like to use is, how many people truly understand the internal combustion engine? I don't, but I pay my mechanic and I trust my mechanic that they're going to fix my car so that I can use it every day. So a financial advisor is no different in that they need to be able to say, look, I'm putting an allocation into Bitcoin, and it can be small initially, 1-2%, which is a bad day in the stock market, right? If it goes to zero, you've lost 2% of your portfolio, which you lose in a bad day in the stock market. But if it doesn't, and it goes 100x over the next 10, 20 years, then we've both done really well out of this. So it's, you just need to trust me that I've got your best interest at heart. I can give you collateral on Bitcoin if you want, courtesy of the Bitcoin IFA. But if you're not that interested in really understanding this, then just trust me. And I think you and I have probably encountered people that we care about very deeply and given them the same spiel, essentially, which is, look, just trust me on this. Put some money into it and forget about it for 5 years. Nah, not interested. Boring.
Oh, there's been so many. And like with my family and friends, there will be that element of trust. Because like I push everyone to learn about this thing. And actually, because now I'm seeing a lot of people come back around that I spoke to 4 years ago. And now they're coming back to me and it's like, how do I do this? I want to start like dabbling in it. And I'm like, you could have listened to me 4 years ago.
It's actually, I always use it as a great gauge of the cycle. So how many people have you had reaching out, been like, do I need to learn about this? But the real gauge for me of the cycle is when it really gets going is, which of these shitcoins should I invest in? Once people start asking that, we know we're nearly at the top.
Yeah, exactly. And like you're now on this, I don't know what to say, like almost like a crusade to like educate financial advisors, and you're doing it in it's still a hostile environment, the UK, towards Bitcoin, but we know that it's coming. The wave of Bitcoin is coming. Like we've seen what we've seen what America are doing. It's coming over here. We're just really slow in the UK, and I can imagine, like, I see you as like that bridge almost between the traditional finance and Bitcoin world. I think correct me if I'm wrong, but I kind of see you in the middle of that, because these financial advisors, there must be billions upon trillions within SIPs and ISAs in the UK. I don't know if you know the number. I don't know what the number is.
It's big.
It's massive. So there's a lot of wealth within there, and it's about educating these people that are the financial advisors that are so used to. Actually, this is probably my question. Like, those financial advisors are so used to not doing stuff outside the status quo, and we're going to follow the regulation, and that's what we follow. And if the regulation doesn't say it, then we can't really follow it. But we kind of need regulation to change for then financial advisors to be unlocked to talk about this. There's a question in there somewhere, but I just don't know where it is. But am I correct in saying that you are like that bridge between the old money and the new money?
Yeah, I think you're correct. So I like to say that I'm bridging Bitcoin and compliancy.
Okay.
And nice. So we face a number of challenges, right? So there will be some that will always hide behind regulation, and some that challenge the status quo. So you and I both know Alan Smith, who is quite vocally challenging that status quo, but obviously still has to exist within the regulatory framework. And we can't take away from that, right? For the most part, the regulations are there to protect people, and I get that. I also understand that Bitcoin can be difficult, and if you are busy and overworked, then learning about Bitcoin can be challenging. So if you're in the regulator and you're understaffed, I don't think it's nefarious. I hope it's not nefarious. I think it's just they're too busy. But there is hopefully some movement on that. You and I are probably both hearing the ban on retail access to ETNs is likely to be lifted at some point in Q3, early Q4 at the latest. So that the ability to hide behind it's not regulated, I can't talk about it, will be over. So then there will need to be another challenge. It's a Ponzi scheme, bad for the environment, blah, 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 right? But that, the regulation is changing. That's a challenge. So the regulatory environment right now is a challenge. Financial advisors being overworked, understaffed, not having the actual time and capacity to do real quality CPD, continuous professional development, to actually learn about new things. That can be a challenge. That's what I'm offering. I'm offering structured CPD as a workshop or a webinar to actually learn about this. Another challenge that we face is that I think it's about 50%. So I think the stat that I know is there's about 30,000 financial advisors in the UK, and about 50% of them are what's called either restricted or tied. So tied would be you work for NatWest and you recommend NatWest products only. Restricted would be you work for the larger networks and you only get to recommend the network's products. And we've had this new academy system in place for a while now where people will join one of the large networks having done their exams, and they'll come out the back end of that academy after a few months, and realistically the only thing they know what to talk about and how to sell, because it's essentially product sales, is that network's product, fund, which are set in stone, right? There's very little creativity or the ability to create something bespoke for a client. So it's not like, I would argue, and I argued this throughout my academy training, which is this isn't really client centric. And I kept bringing up, what about Bitcoin? Like, can we get a 1 to 2% allocation within your existing funds? No. So there are a number of challenges. I'm an eternal optimist, right? So I would hope that the lack of knowledge, there are always going to be some people that are totally against Bitcoin, right? And generally, you and I would agree on this. I think most people are binary. So it's either yes or no. And the no's, within the no's, will be made up of, I hate this and I'm never going to touch it. Fine. Or just lack of knowledge or apathy. Like if I had the time to understand it, maybe, And it's that's the real addressable market for me, is the people that have the grey area but don't necessarily have the time to go and research. There's some who even came through my academy with me that were just like, I don't understand Bitcoin and I never will. And you're like, okay, that's fine. But if you still want to be a financial advisor 20 years from now, then I would recommend just doing a couple of hours research on it, because, as Joe Bryan likes to say, it's inevitable. I think you and I both know that as well. So look, there's a lot of challenges. You're absolutely right. And I'm trying to bridge Bitcoin and compliancy in a very challenging environment that I know that there should be demand. It's just a question of whether there is demand. And sometimes, an analogy I like to use, and you and I caught up on Friday when I was in a particularly low ebb, you gave me a really good pep talk, so thank you for that. But sometimes it feels like I'm trying to forge a path through the densest rainforest in the world using a blunt machete on my own. It feels like a thankless
You thought about that analogy very well. And I could totally, and this is what we were saying on Friday, I can totally resonate with you of, that's what it's felt like having a business, a podcast, and everything Bitcoin related over the past number of years. And for me, the landscape's changing because we're now working with businesses, and businesses wanting to get Bitcoin, and it's kind of changing within corporate land as well. But it's just not caught up with where you're working at? And it's just like, it is, because you're getting business and like people are still coming to you, but it's still very like you're lagging behind even further than where we are. Of It's gonna take a while for these people to figure this out. And do you think it's very hard because there's financial advisors, traditional financial advisors? I'm not saying all of them. I don't want to put them in a basket. I'm just saying in general, are so just entrenched in like traditional finance, and that's what they know. And like, that was super interesting what you were saying about your training. And it's like you're becoming I think these are your words, but like a salesperson for that product, of the people that are training you. And there's not that much like outside thinking of, is the world actually changing as well? Like, is the 60/40 still going to be, and it's not for you to decide whether that changes. It's for the people that you work for. If it's the network or if it's who you're tied to, they're the ones that decide that.
Yeah, that's exactly right. So I was quite public at challenging the status quo, but then within my academy cohort, there was probably 2 or 3 that completely agreed with me, but weren't quite as vocal. It is so. What you've got to remember is that these people, these guys and gals that are financial advisors, are working within a paradigm that they have existed within for the last 100 years. Right? It's pretty set in stone. That paradigm changed in 2008, and the world's just trying to catch up. So ever since 2008, wealth, or certainly the wealth of the top 0.1%, which is a chart that I use in my workshops, and the Nasdaq's performance, they both correlate 1-to-1 to the money printer. Right? So the real hurdle rate, depending on where you are in the world, is probably somewhere between 8 to 12%. I think in the UK it's more like 10. In the US it's probably slightly lower. But the global average is about 12%. That's your real hurdle rate, because it's debasement of your currency plus inflation. We only focus on the inflation figure, which means we're not covering off the sort of 7 to 8% of money printing every year. So and that is such a paradigm shift for people that have been trained that we only need to beat inflation. And a 60/40 portfolio that returns 7% a year, and I take 1 as your advisor, roughly, it varies, but for simple ease, let's assume it's 1. So now it's a 6. And then inflation is targeted at 2, probably realistically more like 3 as an average. The last few years, it's probably been more like 4 or 5. Well, that 60/40 portfolio still performs. It's still, to most people, that is still growing your wealth. Whereas you and I both know that just to protect your purchasing power, let alone growing wealth, just to protect your purchasing power, you need to beat a hurdle rate of about 10% a year, which is, by the way, that's what a passive index fund of global equities returns about 11% a year. So that is directly where the money printing goes. So if you just want to protect your purchasing power, that's what you need to be in. So if you're removing 40% of that portfolio to put it into bonds, which have massively underperformed over the last few years, you're harming yourself. You're not actually protecting your purchasing power. And it is such a paradigm shift for people that have been taught. If you're 10, 20, 30 years into this, and all of your training, all of your FCA approved training tells you you've just got to beat inflation, the headline rate of inflation. I totally get it. I understand it, because, I can very clearly remember that sort of 4 weeks in Lebanon where I was essentially locked in a hotel room. So it was during lockdowns. I was allowed out for about 3 or 4 hours a day, and I would go to the camp a couple of times a week, or I'd go for a run. And that was basically it. Other than that, I was confined to a relatively small hotel room for about 2 months. And just this dawning realization of every new YouTube video that I watched, catching up on the last 12 years at that point since 2008, which starts with Bitcoin, but then you start going down the rabbit hole of what is money, what is currency, what is real inflation, what's debasement, etc., etc. And it was a huge paradigm shift for me. And I didn't even work in financial services at that point. so I come back to being an eternal optimist. It's not nefarious. It's just entrenched, and it's new. And I like to say to as many financial advisors as I can, Bitcoin is not scary. It's just new.
Yeah, that's so true. And like, people find new things scary, though. That's the thing as well, right? And that's the problem that we have. And like, and then what you're doing of like trying to make it more understandable for financial advisors, like is so important. And like making it welcoming as well, and not just being like, oh, well, you don't understand Bitcoin. When, well, I can't work with you. It's like, no, I want to work with you. But what are some of the like the most or the biggest misconceptions that you're hearing from people that you're training around Bitcoin, or some questions that you get during workshops as well? Is there some that really stand out?
So, without wanting to sing my own praises too much, I think I do a very good job of explaining it, which means actually most of the questions that I tend to get are bits of FUD. So for those of the uninitiated, fear, uncertainty, and doubt. It's FUD. There tends to be new FUD every cycle. This cycle is quantum computing. So I tend to get questions around the FUD that I don't cover off. So in the first few that came up was quantum computing. So I was like, right, let's just add a slide. A recent one that I need to add a slide on is, but isn't it just copyable? And so like we had a debate about, gold. Human consensus has said gold, that one. There are other precious metals that priced per ounce are more expensive. But humans have decided, no, this is the one that we're storing in our bank vaults, not platinum, palladium, uranium, whatever it is, right? I now need to go and research and get up to speed myself on the block wars of 2017. So there were hard forks. Other Bitcoins do exist, but humans, as a consensus, have said, no, this one, right? So they don't have the network effect. So it tends to be a lot of FUD. So, it's too new. And I do not have time to cover all of the FUD in a 90-minute presentation, because that could fill a 90-minute presentation. So I probably only have about 4 or 5 slides, but I've built all of the rest in the appendix. So there's like another 15 in the appendix. So someone asked me the other day about transaction volume, and I was able to say, yeah, it's in the appendix. We didn't cover it, but transaction volume, it dwarfs Visa and MasterCard almost combined. So it tends to be, it doesn't. As I say, I like to think that I do such a good job of covering off, why do we need it, and what is it? What does it do? Right. So I, cover off the FUD of it doesn't do anything. Cover off the FUD of it has no value. It's not backed by anything. And I think once people just need that explanation in a calm manner, and also not selling anything. I'm not shilling Bitcoin. Like, I'm not going in and being like, you must buy Bitcoin. It's the future. It's inevitable. It's coming to eat the entire financial industry, regardless of my opinion. What I'm going in and just saying is, this is what it is. This is why I think it helps your clients. And this is how you can get exposure to it if you so wish now. And also, this is how you can get exposure to it post FCA lifting the ban. And I like to think that lands quite well. And I explain it quite well. So that's a very long-winded way of saying most of the questions I get are around FUD.
FUD, yeah, I can imagine. That's
which actually, side note, what that tells me is like the date. Just thinking about this off the top of my head now, the data point of that, the feedback is, I'm typically speaking to a lot of people who haven't done a lot of research and have taken their research or their information from headlines.
Unfortunately. Um, yeah, why did you pick the CPD route? Because obviously we spoke about this as well, and like I looked into it a year and a half, 2 years ago. Of that's how you get in with. I wasn't looking down financial advisors. I was just looking in general CPD. But yeah, can you talk a bit about actually explain what CPD is first, just because not many, whenever I say CPD, people are like, what does that mean? Um, and then, yeah, like why that was a good route for you to go down.
Yeah, it's a really good question. So CPD is continuous professional development, I think. Verify that,
Yes.
don't trust, but
Yep.
I'm fairly certain it's continuous professional development. And financial advisors are obligated to complete 35 hours of CPD a year. 20 of that has to be structured, so it has to be formal. So the other 15 can be like, I read the Financial Times, right? I watched a YouTube video about money. I think
it's quite, sorry, I'm just going to chip in there. It is quite mental, like some of the stuff that you can actually just, you can say with that. Yeah, carry on.
But 20 of it has to be formal, has to be structured. You know, you need some kind of recognition that you've actually completed it. So when I was at the network, that was actually quite easy because we had to complete somewhere between like 4 and 6 hours every quarter of prescribed CPD. So like you had to do it, you had to complete it. You couldn't get past the quarter without doing it. But in a word, it was credibility. So it adds a credibility, and it also adds an element of, so when I sell my workshops, typically I'm selling them to curious and progressive firm owners, but they may not have curious, progressive advisors, power planners, admin stuff. But if you can convince them to come to a workshop that's about something new, regardless of your opinion on it, but it also takes care of 10% of your annual structured CPD requirements, that was the sell. So it adds, credibility, and it's a slightly easier sell.
Makes sense.
And it was also like I was fortunate enough that I had I studied at the LIBF, so I'm an alumni, and an old family friend works there, quite senior. So like I didn't really have a very difficult route. So I was quite fortunate in that way.
How do you think? So I've written down a really tricky question. Actually, we're going to go with this one first, and then I've actually got two things. I've got an idea for you first. Is a lot of people listening to this podcast and listening to Bitcoin in general, like, I don't know what the percentage is that people that have financial advisors that are really deep into Bitcoin. I'd imagine, I don't know, I imagine it's quite low, and because they've kind of taken on that responsibility. But I could be wrong. But almost like getting a movement of people to say, reaching out to their financial advisors and say, asking them, do you know about Bitcoin? Nothing really else. Or it's like getting the clients to then reach out to advisors and say, can you tell me about Bitcoin? Here's where I think you should go. Because I think what you're doing is so important that we need to be pushing more financial advisors to learn about this, just because the world's moving so fast now. That just came to my head. I was like, oh, well, is that a good idea or not? Do financial advisors listen to their clients is the question I'm asking.
I would hope so. When I was a financial advisor, I definitely did. I can't speak for everyone. I don't want to put words in their mouths. In terms of the numbers, so about 8% of the UK have financial advisors. 92% don't. And that number dropped because we had some regulation come in a couple of years ago now, which I absolutely should know the name of and totally can't remember. But it basically said you have to meet your ongoing clients at least once a year. So you have to have an annual review, which then meant in order for that to become sustainable for advisors, you need to have probably a minimum of 100,000 in assets under management, but probably more like 150, 200, because they're obviously taking, let's say, 1%. So in order for them to complete the work for your annual review and be on call whenever you need them, etc., then it's probably about 1,000 per client. So it actually meant that a lot of people got, I don't know this for a fact, but I would imagine that a lot of people got sort of let go from their advisors because they would just didn't have enough in assets under management. So that's the first thing. So about 8% of the UK. I believe the reticence of the FCA to lift the ban and potentially even look at approving things like ETFs and on-chain Bitcoin within ISAs and SIPs comes from a lack of demand from advisors. So we were in this chicken and egg where advisors are demanding it. So the FCA doesn't approve it. So then the advisors can say, well, the FCA hasn't approved it. So they don't create that demand. And I think that same feedback loop exists with advisors and their clients. So the clients aren't demanding it. So the advisors don't talk about it. They don't need to research it. They don't. So it's all this sort of same flywheel of apathy, I guess is probably the right word. Like they're aware of it, but they're not aware of the potential good that it might do for them. Yeah, I think that's the position we're in. So absolutely, I would highly recommend anyone that does have a financial advisor, just speak to them and say, what can you tell me about Bitcoin?
I think that's a good way of, like actually pushing the financial advisors to actually say, I should be looking at this because my client's asking me for it. The only reason I'm saying this is like on the political side of things, it's like people will get in your constituents or whatever it is within your area, you can write into your MP. And people will like get a template and get them to fill that out and send it in to actually put pressure on the politician to then take it higher. I was like, can we do something with financial advisors as well? I don't know. This is just we're totally thought experimenting on the podcast. And I could just be speaking a load of nonsense, but there might be something there to get, because I think it's important to get more financial advisors educated just around what Bitcoin is and not be scared about it.
Well, I would agree, and I've obviously built a business on the back of that. But I don't think we would need to go down the sort of template route or try and force people. I think as long as more and more people just mention Bitcoin, right? If it's in their email, if it's on their phone call, there will come a tipping point where advisors, at the very least, need to be educated on it. And this is the thing. So, I'm not shilling Bitcoin. I'm selling a workshop and a webinar that will bring you up to speed on Bitcoin, whether you want to advise on it or not. But I think you and I both know that in the short term, an advisor who can, at the very least, talk knowledgeably and confidently about Bitcoin sets themselves apart, differentiates themselves from their competitors. And in the mid to long term, 3 to 10 years from now, if they have recommended a small allocation to Bitcoin for their clients, they're probably going to be inundated with referrals from friends and families of those clients. Right? There's nothing better than being, for a financial advisor, I would imagine there is nothing better than their client being on the golf course saying, my advisor recommended I put 2% into Bitcoin 5 years ago, and it's now 30% of my portfolio.
Yeah, I can imagine. That's have you got time for one last question?
Sure.
I realize we're over. This is probably like, we don't know if you want to cut this after, but I want to ask the mental question. Okay. So I've written down here, picture a world in like the long term. So I'm talking in decades time, let's say 50 years time, where the world has Bitcoin as a global reserve currency, everything's getting repriced in it. Because as we know, like at the moment, the base layer, fiat, is losing purchasing power every year. So what then happens when we've got sound hard money at the bottom is taking the Jeff Booth approach, or the Jeff Booth, what he talks about, of going from an inflationary world to a deflationary. So picture that we're in a deflationary world. What is the role of a financial advisor?
It's a great question. So I'm not sure, even within 50 years, I still think we'll have fiat. Right? Bitcoin may be the base layer for settlement, but I still think sadly, I think we'll probably have CBDCs. So we'll still have some form of centralized money that's, let's say, interchangeable with Bitcoin. But Bitcoin is still continuing to rise versus that money. So the role of, I think, of a financial advisor will stop being funds and portfolios. It will be about long-term planning. So it will be the best financial advisors these days are financial planners, right? So they do what's called cash flow modeling, and they essentially build you a plan for the rest of your life based on like income and tentpole moments. I want to retire and buy a yacht, whatever it is, right? So that and within that role comes educator, psychologist, emotional support, right? Investment manager, because when the market declines by 20-30% and all of your clients are clamoring, going, what's going on, I want to sell, blah blah blah, that's when that's when they really earn their crust about, no, it's about time in market. The output hasn't changed, right? You still want this when you're 70, 80, 90, and we agreed that output was based on this input today. If the output hasn't changed, then the input doesn't change, even when the market drops 20%. And I think in a world where we still have fiat, then when Bitcoin is priced in fiat, we are still going to see larger volatility than we see today, certainly in 60-40 portfolios, right? But even in global equity funds that have a vol of 15, Bitcoin's vol 60, but that will probably fall. But so the financial planning role as it exists today, and it is slightly different from financial advisor. So financial planning role will essentially be the same, right? We'll build you a plan, but we'll use Bitcoin as the base case. And, here are the tentpole moments that you want to achieve at 40, 50, 60, 70. And we'll go with those. We'll just have to try and the difficulty. And so I used to play around with cash flow modeling tools. And when I was setting up my B2C coaching business, I was playing around with these cash flow modeling tools, and you can like slightly change the inputs. So I was saying, right, inflation is really 10%. It didn't like that. And then when I was saying, I'm going to allocate like 10 to 20% of a client's portfolio, like I didn't go wild. So I'm like 80% into global equities, which return 10, 11% a year. And then 20% into Bitcoin, which over the next 20, 30 years, someone like Saylor, absolute genius, way more intelligent than me, but he thinks it will probably average something like, I think it's dropped the ARR now. So it's like 50% a year at the moment, but he expects that to drop by 2% a year for the next 20 years. And then it will settle at 20. So I came to an average of like 20%. So I'm like 80% of your portfolio, global equities, returning 11% a year. 20% into Bitcoin, which is returning 20% a year. And you should have said, like, this cash flow modeling tool just flipped out, because obviously with compound gains, it was just hockey stick. So it was like, by the time they're 90, they're like billionaires. So you couldn't zoom in on anything. So, all of those tools will need to change, right? But I actually don't think it will be vastly different. I don't believe there'll be as much call for them. So, it will, like anything, there'll be compression and consolidation, and the first movers will win. The ones that add the most value will win. But I still think think of human nature. There's still going to be people who couldn't care less about money, about thinking about money, about planning money, about doing anything with money. Like, if in 20 years we're just like, look, we're moving to a Bitcoin standard, they'll be like, okay, don't care. I don't know what that means, but sure.
That's, yeah, I think you're right. When you look at human nature, it's going to take, and I'm forever the optimist as well, and 50 years is probably me being optimistic.
I tell you what won't have changed, right? You and I will still be at Bitcoin Prague, cheat code, Bitcoin Vegas.
Exactly. Awesome. Well, thank you so much for jumping on, joining me. I love what you're doing and just supporting it. And yeah, for anyone, if there's financial, I'd love if there's financial advisors listening to this and like they then end up reaching out to you after that. Or if it's just people that are listening who've got a financial advisor who they're wanting to educate around Bitcoin, but maybe they struggle to like articulate it or explain it. For them, now there is a person working in that niche, which is ideal. So yeah, thank you so much for coming on. It was, yeah, so good to talk to you.
My pleasure. Do you mind if I just give a quick shout out? So
go for it.
If anyone does want to share this with their financial advisor and wants to point their financial advisor in my direction, I'm at the Bitcoin IFA on Twitter, and I'm Daniel Parkinson on LinkedIn. And there's also a LinkedIn page, which is the Bitcoin IFA. And the bitcoinifa.com. Forgot my own website.
All the links are wherever I post this. All the links are below, so perfect. Everyone can just go and click on them. Awesome,
amazing.
Man. Thank you.
Thank you.